Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Welcome back, everyone. Today, we're really zeroing in on Arista Networks. We'll be looking closely at their latest financial results and pulling out the key strategic insights from their Q2 2025 earnings call. This isn't just a numbers review, though. We want to understand the big trends shaping their business, how they're tackling this, well, incredibly fast-moving market, and of course, what it all means for networking in general, especially with AI just exploding. Arista definitely put up some impressive numbers, and their outlook is pretty bold.
Exactly. Arista is a major player, no doubt. And they just gave us this fresh look into their operations. These quarterly calls, they're more than just financials. They really give you a unique window into a company's health, their strategy, and crucially, the real-time trends they're seeing on the ground. So our goal today is to break down not just what they reported those impressive results, but really dig into the why behind it. And maybe more importantly, explore what's next. We're aiming to give you a clear shortcut to understanding the most impactful stuff straight from their perspective. You'll come away really well informed on this key company. Arista Networks' stellar Q2 2025 performance and robust outlook.
Okay, let's unpack these Q2 numbers then, because, yeah, they are pretty compelling. Arista didn't just meet expectations, they blew past them. Record Q2, $2.2 billion in revenue. That number alone is big, but get this. It was a full $100 million more than what they were forecasting internally. And looking bigger picture, that's, 30.4% growth compared to last year? What really stands out, too, is that this wasn't just one hot product area. They said it was driven by strength across all their product sectors. That signals really broad demand, doesn't it?
It really does. And what's interesting when you look inside that revenue number is the composition. If you dig in a bit, about 16.3% of that $2.2 billion came from software and service renewals. Now, that might sound like just a detail, but it's actually really important. It points to strong customer loyalty, stickiness, and a solid base of recurring revenue. Think of it like a foundation. It gives them predictability, makes them more resilient if the market gets choppy, shows they're not just shipping boxes, they're building these long-term relationships. And then there are the margins. Non-GAAP gross margins hit 65.6%. That was notably above their guidance.
Above guidance on margins, too. How did they manage that?
Well, it seems like a few things came together. Really efficient supply chain management, that's something Arista often highlights, plus some benefits from how they managed inventory. They also mentioned minimal impact from tariffs, so they've clearly navigated that effectively. Oh, and another point, their international business got stronger too. It contributed almost 22%, 21.8% of revenue. So they're growing globally as well. It paints a picture of strong execution all around.
Okay, so Q2 was strong. But their updated guidance for the whole year for 2025, that really shuts confidence, doesn't it? They started the year with what they called a pragmatic guide, 17% growth, aiming for $8.2 billion. Respectable, sure. But now, mid-year, they've bumped that up significantly. They're forecasting 25% annual growth, targeting $8.75 billion. That's an extra $550 million they expect to bring in this year. And it sounds like it's coming from momentum across AI, cloud, and enterprise.
Yeah, for those of us watching the space, that's not just a little nudge. It signals what Arista themselves are calling a mid-year inflection point. This big jump in guidance shows they really see this massive potential unfolding. They're talking about becoming a truly transformational networking company, addressing a massive total available market.
Yeah.
From their perspective, it feels like a unique, once-in-a-lifetime opportunity, especially with AI driving so much demand. And critically, this isn't just wishful thinking. They're saying it's driven by confirmed activity, real demand they're seeing and winning across all those key sectors.
Confirmed activity, that's key.
Absolutely. For analysts, seeing a company raise guidance that much mid-year, especially in tech, it implies a very high degree of confidence. They must have strong visibility into their pipeline. It's a real statement.
Let's look a bit deeper financially. Operating income hit $1.08 billion this quarter. That's a huge milestone for them, right? First time over $1 billion. And it landed at a really strong 48.8% of revenue. Net income was also impressive, $923.5 million, or nearly 42% of revenue. That flowed right down to earnings per share, $0.73 diluted, up almost 38% from last year. These numbers really speak to how efficiently they run the business.
They absolutely do. It highlights that operational efficiency story. And consider this, they generated about $1.2 billion in operating cash flow just in this period. That's the highest in their history. That kind of cash generation shows a business that's not just growing fast, but is also incredibly disciplined. They're turning revenue into cash very effectively. They ended the quarter with a really healthy balance sheet too, $8.8 billion in cash, equivalents, and investments. That's a serious war chest. Gives them lots of strategic options.
And they're returning cash to shareholders.
Yep, active share repurchases. They bought back $196 million worth this quarter, and they still have authorization for another $1.4 billion. So that commitment's ongoing. We also saw some movement in deferred revenue, which hit $4.1 billion total. Product deferred revenue specifically was up $687 million. Now, that number can bounce around a bit quarter to quarter, depending on new product timing, specific contract terms, especially with big AI deals. But the general upward trend, it usually signals growing customer commitments and future revenue they'll recognize down the line. Also worth noting, they mentioned capital expenditures for new facilities in Santa Clara. Investing in their physical footprint like that suggests they're gearing up for more growth. 2. The AI revolution and Arista's central role.
Okay, let's pivot now to the topic that's really driving so much excitement and growth for Arista, AI. They've laid out this really clear AI center strategy. It doesn't replace their data center focus, it actually complements it. They break it down into three parts. First, the scale-out front end. Can you explain what that is and why it's so important?
Sure. Think of the scale-out front end as the main hub or gateway for the AI infrastructure. It's a network that connects those massive back-end AI clusters where the heavy lifting happens to everything else. We're talking external clouds, other compute resources, storage, the WAN, other data centers. It handles all the data coming in and going out, kind of orchestrating the traffic flow for both AI and regular cloud stuff. It usually runs on a leaf-spine topology. Imagine leaves as servers, spines as the high-speed highways connecting them. It ensures data moves smoothly into and out of the AI engines.
Okay, that makes sense for the front end. What about the back end pieces?
Right, so second is the scale-up backend. This is all about super high bandwidth, ultra low latency connections within a single rack. The idea is to tightly link multiple accelerators GPUs, or maybe those custom XPUs some companies are building so they act like one big compute system. This boosts performance when you have a lot of processors packed together. Right now, this area mostly uses proprietary tech, like NVIDIA's NVLink. But Arista thinks this will shift towards open standards like Ethernet or maybe UA-Link. That's a key bet for them.
Interesting. And the third part?
The third part is the scale-out backend. And this is arguably where Arista really leverages its core strengths. These are dedicated network spines designed to connect XPUs across many racks, building those truly enormous AI training clusters. They need incredible bandwidth and super low latency because training these huge models involves constant communication between thousands of processors. What's really significant here is the shift away from InfiniBand, which was common in high-performance computing. It's rapidly moving towards Ethernet, especially with the new Ultra Ethernet Consortium spec released in June. That plays right into Arista's wheelhouse.
It really sounds like network efficiency isn't just a nice-to-have in AI, it's absolutely critical for the economics.
It's paramount, totally fundamental. Arista puts it very bluntly. Poor networks and bottlenecks lead to idle cycles on GPUs. And idle GPUs mean you're wasting money on those expensive chips and on the power and cooling to run them. It's a double whammy. When you hear that maybe 30% to 50% of a GPU's time can be spent just waiting for data over the network, well, you see why efficient networking is super paramount.
Like having a Ferrari stuck in traffic, you said earlier.
Exactly. You need the right roads.
Yeah.
Arista's answer is their Etherlink portfolio. They launched over 20 products just in 2024 for this and their network operating system, EOS. These are key to their scale-out approach, providing that single point of control and visibility, which is so crucial in these complex AI networks. EOS helps automate and simplify managing these massive setups.
Let's dig a bit more into scale-up versus scale-out. You said scale-up is simpler interconnects within a rack, boosting performance for lots of processors packed together. And even though it's mostly proprietary now, like NVLink, Arista sees this as a totally new incremental market for them. Why do they think they can win there?
Yeah, their bet is basically that Ethernet as the underlying transport will eventually win out even in that scale-up space. They believe this trend favors them in Broadcom. If Ethernet becomes standard there, it could mean significant market share gains for Arista, starting from basically zero today. They also mentioned UA-Link as another spec that could potentially run over Ethernet. It's all about moving towards open standards.
Okay, so that's the potential in scale up. What about scale out, their traditional strength?
Right, scale-out is what they call their bread and butter. Their 7800 spine and AI spine platforms are seen as top tier. And that's because of specific advanced features they've built in. Things like virtual output queuing for smooth data flow, really sophisticated congestion control to prevent bottlenecks, and deep buffering so data packets don't get dropped or delayed. These features are absolutely vital for high-speed AI training. They make Arista's gear workhorses for both the back-end training networks and the front-end connectivity. And this ties into their silicon strategy, too, working with partners like Broadcom. They mentioned the new Jericho 4 chip for 800 gig speeds and beyond. It's that mix of smart software on cutting-edge hardware.
And the impact of AI on Arista's business is becoming really tangible now, going beyond just the huge cloud players. They aimed for $750 million in back-end AI networking revenue this year, and they said that's well on track and gaining. That's amazing growth from basically zero just 3 years ago in 2022. And you mentioned this back-end AI revenue is totally incremental, right? A whole new growth area.
Entirely incremental. And what's interesting looking ahead is how these networks might evolve. As the AI models get bigger and more distributed, the lines between the back-end and front-end networks could start to blur. It might become harder to separate them neatly. But regardless, Arista is very confident about their overall AI position. They expect their total AI networking revenue to be over $1.5 billion in 2025, and they see it growing for many years.
$1.5 billion just from AI networking next year. Wow.
Yeah. And it's not just about supporting NVIDIA GPUs. They're positioning themselves as the network for all types of AI accelerators. NVIDIA, AMD's MI series, even those custom chips the big AI companies are building. That broad compatibility is a real strength. Plus, they're winning new customers beyond the giants. They mentioned getting traction with enterprise clients building AI infrastructure and also neoclouds, maybe emerging cloud providers or big companies building private AI clouds. They've landed about 25 to 30 of these new types of customers so far. And things like agentic AI, where AIs act more autonomously, are changing network traffic patterns, driving more complex any-to-any communication.
So even with losing one sovereign AI customer, they're still hitting targets.
Exactly. They're still exceeding their back-end goals. Why? Because their top two existing AI Titan customers are building even larger clusters, now approaching 100,000 GPUs each, which is just staggering scale. And you combine that with the growing contribution from all these new enterprise and the neo cloud wins, it shows their AI customer base is diversifying and the overall demand is just massive. 3. Expanding horizons. Enterprise, SD-WAN, and strategic leadership.
Okay, AI is clearly huge, but Arista isn't just an AI company. They're also making serious moves in the enterprise space, especially campus networking. They said Q2 was a record quarter in terms of demand for enterprise campus gear, the strongest they've ever felt. And that's a big market, right? Like $25–30 billion TAM.
Huge market. And this isn't accidental demand. It's coming from a real strategic push. Arista's focused on winning new enterprise customers, new logos, and really showing how they're different, especially now. Think about the post-pandemic world. Hybrid work, tons more IoT devices connecting. Enterprise networks are getting way more complex. Arista's pitching solutions for all of that. Wired, wireless, managing IoT, segmenting networks for security, zero trust, even zero-touch provisioning to make deployment easier. They saw a real pickup in customers adopting these things in the first half of 2025. Their message seems to be landing.
And speaking of expanding in the enterprise, they made a pretty significant acquisition announcement, too. They bought VelaCloud, an SD-WAN leader. They said it fills a missing void for them. This feels like a key piece for connecting distributed businesses.
It's a really smart strategic fit. VelaCloud brings this secure, AI-optimized WAN technology, perfect for connecting branch offices and remote sites smoothly and securely. It slots in perfectly alongside Arista's strength in the data center and the campus. It lets them offer a more complete end-to-end network story.
And it helps them reach customers differently.
Definitely. A big part of this is VelaCloud's strong relationships with managed service providers, MSPs. That's a really important channel to reach lots of businesses. Arista plans to use that VelaCloud MSP motion to sell their entire portfolio through those partners, not just SD-WAN. That can really broaden their reach. Now, financially, VelaCloud won't dramatically change Arista's 2025 revenue. There's some work to do to get its revenue back to where it was before Broadcom owned it briefly. But strategically, it's significant. It also fits into how Arista sees SD-WAN security evolving. They talk about two paths.
Two paths.
Yeah. For basic branch security needs, Arista can handle that. But for really deep cloud security, the SaaS-E type stuff, Secure Access Service Edge, they plan to partner with the specialists like Zscaler or Palo Alto. It lets them focus on the networking core while ensuring customers get best-of-breed security. It's a pragmatic approach.
Makes sense. And to drive all this growth, AI, enterprise, integrating VeloCloud, they're also bringing in new leadership.
They are. Some internal promotions, but the big news is welcoming Todd Nightingale as president and COO.
Right, his background is pretty stellar. Meraki, Cisco CEO at Fastly. He knows enterprise and cloud services inside out.
Exactly. This is all part of what they're calling Arista 2.0. They're entering this next phase, aiming to jump from about $5.8 billion revenue in 2023 to a forecasted $10 billion in 2026.
$10 billion by 2026. That's 2 years ahead of their original plan.
2 years ahead. It's ambitious. They say it relies on a trifecta: great customers, innovative products, and next-gen leaders. Todd Nightingale's role will focus on boosting enterprise customer engagement, bringing in new logos, and driving operational excellence everywhere. His passion for networking is seen as a major plus. It signals they're serious about managing this next wave of growth effectively. For fee, navigating the competitive landscape and future growth drivers.
Okay, let's talk competition. Networking is always tough. We've heard some noise lately, right? Growth at Celestica, NVIDIA making moves in networking. Some analysts wondering if that's bad news for Arista. How do they see it?
It's a fair question. Arista's take is pretty consistent, though. They basically say the competitive landscape hasn't fundamentally changed. They emphasize they've always operated in a highly competitive space. They competed fiercely with Cisco for years, and now NVIDIA is in the mix, both with InfiniBand and bundling networking. Plus, there's always white box competition. They did acknowledge the chatter was louder recently, maybe because their share at Meta wasn't growing quite as fast as before, leading to speculation.
But they push back on that.
Strongly. They argue their innovation and differentiation has never been stronger. They point to platform performance, advanced features, and this seems really important to them: customer intimacy. They believe customers value their support, their quality, and how they help solve problems. It suggests that while tech specs matter, that overall relationship and trust are key differentiators for them. It's not just about the box.
That customer intimacy point comes up again. So how are they balancing things? They have those huge Cloud AI Titan customers, their favorite customers, contributing a lot, but they're also growing with neoclouds, sovereign AI, enterprise.
Yeah, it's about balance. They expect to have two very meaningful businesses. You'll still have those massive investments from the big AI and cloud players. That's foundational. But alongside that, you'll have the growing aggregate contribution from all those other enterprise and neocloud customers. Individually smaller, maybe, but collectively significant and growing. This diversification is smart. It makes them less reliant on just one or two giants and provides a more resilient growth path overall.
Which leads to the big question: sustainability. Can they keep up this growth and maintain those incredible margins, near 49% operating margin, especially with cheaper white boxes out there?
That's the million-dollar question, or maybe the billion-dollar one for Arista. Their answer comes back to efficiency. They argue that 49% margin isn't just about premium pricing, it's about how efficiently they operate. This company knows how to do more with less, is how they frame it. They acknowledge white boxes exist for customers who don't need all the bells and whistles. But they argue Arista provides value, better buffering, congestion control, the reliability of EOS that actually reduces operating costs for customers.
So it's a CapEx versus OpEx trade-off.
Exactly. You might pay more upfront for Arista, CapEx, but you save money long-term on managing the network, needing fewer support staff, less troubleshooting, OpEx. They're selling operational simplicity and reliability. And they're not standing still on tech either. They mentioned having Broadcom's next-gen Tomahawk 6 silicon in their labs already, so new, faster products are coming next year. They don't see that as delayed at all.
Interesting. One last thing. They hinted at a blue box strategy. What exactly is that? It sounds intriguing.
Yeah, the blue box concept is still evolving, but it's an important part of their thinking. It's not about replacing their high-end gear. The idea is to offer very battle-tested, highly well-designed hardware. Think of it as a premium, hardened white box bundled with their EO software and support.
Mm.
It's meant to complement white box solutions, offering Arista's quality and software intelligence as a step up, but maybe not the absolute top-tier platform. It's a way to address a broader market segment that values reliability and ease of use, but might be looking at generic options. It coexists with white box, offering a differentiated Arista quality alternative. It could significantly widen their reach.
Fascinating. Well, this has been a really thorough look at Arista's quarter and their strategy. To quickly recap, stunning Q2 results significantly raised guidance for 2025, and they're even accelerating their $10 billion target for 2026. They're clearly capitalizing on the AI boom with new revenue streams while also doubling down on the enterprise market through organic growth and smart acquisitions like Bella Cloud. It really highlights their financial discipline, tech leadership, and that strong customer focus.
Absolutely. What Arista shows is how you can thrive, even accelerate, in a market that's changing incredibly fast. It really comes down to operational excellence, understanding where the market is going and building that trust with customers through innovation and support. As you think about this, consider how crucial this kind of network infrastructure is. It's literally the foundation enabling these massive shifts we see in AI and how businesses operate globally. Arista's right there building those foundations.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.